Hello everyone, welcome to Officer 24/7. My name is Niharika Walia Bhatnagar and I'm with you with the area of AFM, Accounting and Financial Management for Bankers. Today we are talking about what is company accounts and what are the basic concepts. Acha, company accounts can be defined as the accounting system which is specifically made for companies covered under Companies Act 2013 or any previous act which was there before. Basically, Companies Act doesn't come from the 2013 itself. It was there before that. It was 1956 Act. And before 1956 even there was a specific act, but it was under the rule of the Queen. So companies were there even before the time period when the entire thing came into light. Okay, so that's what we define in terms of the company accounts. Now, the first thing when we talk about the company accounts, how do we study further? What is exactly the term company and how do we study it further? Right? Let's talk about it. Which acts defines a company as a company incorporated under this act or under any previous company law. Okay, here comes a specific question related to the topic which I just discussed with you. Before I proceed further, everyone, and I talk about the answer. First of all, share the session. Number 2, like the session. Number 3, if you haven't subscribed to our channel yet, please go and subscribe to our channel as well. And along with this, the next point that comes is after this, the next point is that if you haven't taken up our courses, our crash courses have begun. The crash course for AFM has just started today itself. So if you haven't enrolled yourself, then enroll yourself. Use the code Y541 and get a maximum discount of 81%. So hurry up and check it out right away, everyone. Chaliye, now let's move on. Here comes the specific question, everyone. Indian Contract Act, Companies Act, Partnership or Limited Liability Act. When the entire working is done, it is as per Companies Act 2013 or any other specific act before this. Okay, even the Partnership Act, the limits of partnership is also defined in companies' rules. Right? Done, everyone? Chaliye, then let's look at it. What is an extent of liability of members in joint stock company? Unlimited liability or limited to the assets of the company or limited to the face value of the shares held by them or limited to the profits of the company. When we try to talk about the joint stock company, now, the liability of these organizations is limited to the extent that they define. That this is the value of the company and I would like to buy only this much amount of shares, so they are not liable to pay beyond that level, everyone. Okay? That's the specific rule. Chaliye. In this case, whenever we define, if I said that I would not buy more than 10,000 rupees in terms of the shares, and I'll buy 10,000. There's nothing more than nothing less. है ना? So, in this case, the correct answer is limited to the face value of the shares held by them. What distinguishes the formation process of partnership from that of a company? Partnership formation involves fewer legal formalities. Partnership formations involves more legal formalities, or limited liability, limited company formation involves fewer or no legal formalities. The truth is, to form a company, you have to go through a lot of problems. There are a lot of formalities which you have to follow. So this problem is definitely there. There are a lot of legal formalities which they have to follow. So that's not the point. Then partnership has fewer legal formalities. That's true. When we talk about the partnership formation, it involves fewer legal formalities. Now comes the next question, everyone. This is, as per section 55 of the Companies Act 2013, what is prohibited in terms of the preference shares? Everyone? Issuing non-participating preference shares. Non-participating matlab the ones which do not have a right over surplus. First of all, preferences paid, equity is paid whenever the surplus is left. This surplus normally belongs only to equity. ठीक है ना? But this preference share will also have a right over it, which is called participating preference shares. Then issuing irredeemable preference share. Irredeemable matlab the one which are not to be redeemed. Not to be redeemed matlab not to be redeemed matlab which are not to be paid off. Right? Then comes issuing non-cumulative preference shares. Non-cumulative means the ones in which are in case the company is not able to pay dividend this year, then it will pay the next year. This is for cumulative. For the other one, it is non-cumulative. Then comes issuing redeemable preference share. Redeemable matlab in which the payment has to be made in a specific period of time. Normally the preference share time tenure is 20 years. In this case, it is more than that. So this is not allowed to issue irredeemable preference shares, everyone. So in this case, the correct answer is issuing irredeemable preference shares. What distinguishes the convertible preference shares from the non-convertible? Acha, what do you mean by convertible and non-convertible? Everyone? What distinguishes convertible preference shares? Convertible preference shares are those preference shares which can be converted into equity. The ones which cannot be are called non-convertible. Matlab, these are to be compulsorily paid in cash only. They are to be paid in cash, or you can say through the bank, because normally we are using demat account now. So these are paid. But non-convertible are not paid. They are given equity shares. But of course, at the option of these shareholders. Convertible preference shares have a right to participate in surplus after payment of equity capital. Convertible preference shares can be redeemed within a specific period. Convertible preference shares can be exchanged for equity. They can be. Okay, this is the point. Then convertible preference shares are liable to be redeemed in case of winding up. Nahi. The correct answer is C. Okay. Next question, everyone. What is the consequence if a company issues shares at discounted price? Contrary to a section 53 of the Companies Act 2013, the shares issued by will be considered valid. The company will be liable to penalty and must refund all monies received with interest. The company will be exempt from any penalties, or the company will be required to issue additional shares to balance the discount. What are the consequences if a company issues shares at a discounted price? If the company is issuing shares at a discounted price na, then obviously वैसे तो this is not allowed, पता है, this is not allowed anymore to issue the shares at the discount at all. You can do it only if you are issuing ESOS, that is employee stock option scheme, or ESOP what we say, or these are forfeited shares. Even the forfeited shares are also gone because there are no more payments to be made in the installments. The entire payment has to be made by the person at once. ठीक है ना? So in this case, the correct answer has to be the company will be liable to pay penalty and must refund all the monies received with interest. You cannot issue at a discount. What are sweat equity shares according to the Companies Act 2013? Done. Now what is sweat equity? Sweat equity are the shares which are given to the people there. The shares issued at a premium to employees of the directors, and these are issued at a premium, issued at a discount, issued for a consideration other than cash or any intellectual property rights, or shares issued for consideration other than cash to external investors. When we talk about sweat equity share now, I can always think of sweat equity is the shares that we are giving to the equity shareholders, because they are putting we are giving this to the employees of the company, especially the directors, who are putting their hard work, sweat, everything into the organization for growth, है ना? So when they say this particular area, the shares which are issued at a premium to the employees or a director, you're going to charge more money because they had been putting so much of efforts in the organization. Doesn't that sound inhuman? That people are working for you and you're not really helping them. Company can always issue shares at a lower price to them as a reward for their hard work, isn't it? So in this case, the answer is the shares issued for a consideration other than cash to the employees or directors for providing know-how or intellectual property rights. Normally, we put them into an exercise area. We normally put them under an exercising period, that means 3 years, 4 years, and after that particular period, we are giving them shares. Okay? And this would be deducted from their salary again, and we'll be giving them this amount. Done, everyone? Let's move on to the next question. This is a question of ESOS, grant to an employee. What is ESOS grant? What do you mean by ESOS? Obligation to purchase shares at a predetermined price, right to apply for shares at a predetermined price, obligation to sell shares at a predetermined price, or right to sell shares at a predetermined price. We're going to give the shares to the employees on the basis of employee stock option scheme, ESOS. Now in this case, what's going to be the answer? The answer is right to apply for shares at a predetermined price. The price is already determined and the people can exercise it for the given price. ठीक है? Here comes the next question, everyone. What is prohibited regarding the issue of bonus shares under Section 63, subsection 3 of the Companies Act 2013? Everyone, what's going to be the answer? Bonus shares cannot be issued without the prior approval of the shareholders. Bonus shares cannot be issued in lieu of dividend. Bonus shares can be issued to existing shareholders, or bonus shares cannot be issued at a premium. What's going to be the answer? Bonus shares are basically given to the existing shareholders. That means the point number C is definitely wrong. They are not issued at all for a premium. They are issued for free. They cannot be issued without cannot be issued without prior approval. You don't need prior approval of the shareholders for this. But what you really need is, you cannot issue it in lieu of dividend. You cannot just give bonus shares and say, sir, we won't be able to give you dividend at all. Done, everyone? So now let's move on to the next point. If you haven't subscribed to our channel yet, then please go ahead and subscribe it right away. Acha, here comes the next question. According to the Companies Act 2013, can a company utilize the balance from sinking fund, GR and P&L for issuing bonus shares? Yes, because if SEBI says so. No, because these balances cannot be used for issuing bonus shares. Yes, if the company has exhausted balances from other specified accounts, or no, these balances can only be used for dividends. When we talk about Companies Act 2013, the answer is yes, you can do this if balances from other specified accounts have been exhausted. Matlab, if you have other balances available, then use that. If nothing is available, then use these. Done. Next question. Which one of the following conditions a company must fulfill in order to issue fully paid bonus shares under Section 63, subsection 2C of the Companies Act 2013? The company must not have issued any dividends in the past year. The company must not have defaulted the payment of interest of debentures. The company must not have defaulted in payment of statutory dues of the employees. The company must not have defaulted in payments of salaries to its directors. Basically, now, if you cannot pay the amount which is statutory to your employees, then it's of no use. That means you're not paying other things to people there. That means the company must not have defaulted in payment of statutory dues of the employees. They should not have done this part. Okay, everyone. Now, if I said that I'll be giving you bonus shares, can I say that no, I won't do it? According to the section 63 subsection 2 subsection D, this is actually 63 to D. This is called subsection and this is subsection of the Companies Act 2013. What is the time frame within which a company must implement a bonus issue once approved by the board of directors? Within 30 days, 20 days, 15 or 10? In this case, the answer is within 15 days, everyone. Okay, so that's it for the day. But before I end my session, everyone, let's have a quick look at our courses. Everyone, I hope this is visible to you. Acha, our AFM crash course has just started. You can review the particular course there. You just have to go onto the area of www.adda247.com. Go onto the area of JIB and CIB. Once you go onto the area of specifically JIB and CIB, you will find it here. In the area of JIB and CIB, go on to the area of JIB May 2024. Here it is, everyone. This is our Mahapack 2.0. This is available at a very good discount. You can use the code Y541 and you will get it for an amount of 81% discount. This is for 5,999 only, 6,000 rupees, and you will get it for 6,000 rupees directly. What you need to do is, it is available in English medium, available in bilingual. Online live classes are available, 600 hours. 281 test series are available, both complete as well as topic wise. 207 ebooks are available, as well as previously recorded videos are also available. All these things are available. Along with this, everyone, you can review our courses further. The entire mini marathons, maha marathons, all included. Practice paper included, doubt sessions included. So if you are planning to purchase this particular course, then hurry up and look forward to it right away, because the time is ticking away and the sale will end soon. So before that particular day comes, go ahead and enroll yourself in our courses as early as possible. Thank you so much. We'll be meeting in the next session soon. Thank you. And don't forget to be there in the crash course, everyone. The crash course has begun for AFM. So if you're planning, then tomorrow the class would be there at 7 a.m. in the paid courses. So enroll yourself right away and be there. Thank you.